What's going on, everybody? Thumbs up if you can see me, if you can hear me. Turn those cameras on. Let me see those beautiful faces. What's up, Rosa? What's up, Natasha? We got Gowan in the house, Jennifer, Christopher, Lenovo. We got Ish. We got Hormith. We got Jan. We got Trayisi. Is that right? Trayisi. I like the thumb up. Wendy's in the house. Turn these cameras on. I want to see some vibes here. Ian Lawrence, Fred. Looks like got some new faces here. Eric Autry, good to see you. Bill Lapham. Fantastic. All right, look, I want to see cameras on. I even dressed up for you. Actually, I wear this for my my Academy members, and I teach on Mondays. So I just came from our crypto course, and before that, I was in our Life Accelerator course. So I've been teaching for the last couple hours, but I wanted to do this live call tonight because of everything that happened over the weekend. But I just didn't want to talk about the drama. I want to talk about how there's money to be made on the back of these crises. Has anyone ever heard the expression, never let a good crisis go to waste? Has anyone ever heard that expression? Well, look, when it comes to investing, you have to think that way. And, you know, we are in a buyer's market right now when it comes to certain technological protocols. And right now in our investment club and in our crypto and DeFi academy, we are seeing some incredible opportunities. And right now, the rest of the street and the rest of the market is unable to take action on those opportunities. So we are seeing some of the most incredible deals right now. Inside our investment club, we're actually investing $1 million this week into 3 different protocols. And the reason we're doing it, we're getting incredible deals that we think, you know, one year, 18 months from now are going to just be total slam dunks. And the reason we're doing it is because most of the valley, most of the world got burned last year on their investments, and they're not able to fund some of the most promising companies. And because of what happened over the weekend with Silicon Valley Bank, there's even more opportunities now for some well-placed, intelligent investing to have these massive asymmetric returns, bigger than anything you're going to see buying Bitcoin or Ethereum or Sandbox or any of those cryptos. And I love them. I've had their leaders on my show. Okay, I love all those protocols. I'm in Paris at the Blockchain Week Summit next week. I'm going to meet all of these people. They've got great protocols, but all of the public tokens, it's not the way to make the big money. If you want to make 100x, 200x, 300x returns on your investments or more, you have to be involved in early stage deals. That means private sale tokens or early stage equity deals. That is where the opportunity is. And because of Silicon Valley Bank, we're seeing tons of that right now. Does that make sense to everybody here? Just thumbs up would make sense. Thumbs down if you have no idea what I'm talking about, because that's okay, because I'm going to explain a little bit of that today. I'm also going to talk about what happened with Silicon Valley Bank, because I was a banker for many years. Please forgive me for being a greedy banker for so many years. I think I've atoned myself with 11 years of broadcasting on London Real. Maybe I got a couple years left. But look, I saw the worst of the worst, right? I was started on Wall Street in 1993. I was a derivatives trader on the fixed income book. I traded billions of dollars of US Treasuries, so I understand the US Treasury yield curve. I dealt with lots of financial institutions as customers, so I understand regional banks like Silicon Valley Bank. I understand capital calls. I understand runs on banks. I traded credit derivatives in London during the financial crisis of 2000, 2007, and 8. I made a ton of money because there was a lot of volatility. And again, never let a good crisis go to waste. I had a lot of dealers that had to move positions, and I made a ton of money. And I saw banks go bankrupt. One of my biggest customers at the time was Lehman Brothers. Does anybody remember the name Lehman Brothers, right? I literally had about 6 traders at Lehman Brothers that were my best friends, and I had covered them for years. I had one that traded bank credit default swaps, one that traded industrials, one that traded telcos, one that traded chemicals. And I remember they all called me up one day and they're like, Brian, we were given cardboard boxes and we're told to leave the office in the next 40 minutes. And I was like, serious? And they're like, it's over. And I was like, wow. I saw it all happen in front of my eyes, and these were all my counterparts. And so I watched what happens when there's a run on the banks. I've seen the consequences. And this weekend, I was deeply in touch with some of the highest levels of people involved in the game here. People like with deep connections into lots of VC, into the banking, even people that knew what was going on behind the scenes. So I followed it, and I kept my mouth shut until today. And I wanted to talk to you about what I learned and how we can position ourselves going forward with everything that happened this weekend. All right, sound good to everybody here? Ask me any questions you have in the chat. Turn the cameras on. Martini, if they don't have the camera on, feel free to just throw them out. Just throw them out of the room. Banish them from future Zoom calls. You don't have to wear a tie if you want. I appreciate it. You know, Dieter, you're looking good. Bill, you're looking good. Peter Vicente, you're looking good. Thank you. And let's jump into it. All right. I literally threw this presentation together this morning. So if it's a little rough and ready, it's because I literally just put it together. But let's start here. Can everybody see this? This is our presentation for the day. Thumbs up if you can see it. This is an AI generated image of me. We're making some AI investments in our venture investment club. So I've been playing around with the art. I'm actually much better looking in person, but this is the image. And today I want to talk about how the Fed has rescued the failed Silicon Valley Bank depositors, how to profit from this market volatility. I want to talk about what happens. I want to also talk about how you can position yourself for incredible gains, right? The rich know how to get wealthy in times of tragedy, all right? What do they say when there's blood on the streets, you buy real estate? Has anyone ever heard of that expression? That's what all the wealthy families say, right? So if you know how to do this right, you can take advantage of this. If you want to curl up in a ball and go cry in the corner and lick your wounds, that's what most people do in times like this. Let me tell you, that's not how billionaires are created. And by the way, millionaires and billionaires are created in the bear markets. The majority of them were created in the bear markets, not in the bull markets. Is that clear for everybody as well? In the bull market, everybody and their mother is getting rich, right? Everybody's got some coin they're shilling. Everyone's got some NFT they're trying to throw at you, right? Everybody's making a buck. In the bear market is when the true players come out. And if you're building and investing here, that's when you make the real wealth. So let's look at what happened today. Also, we're investing in 3 hot deals. We're putting over $1 million, and I'll share with you what we're investing in and why. So you can start to see the patterns if you see these things out there that you can participate in. So today I want to talk about 3 things, all right? We saw technology startups wobble on Silicon Valley Bank scare. And so now is the time to double down. That's my question for you, okay? The next thing I want to talk about is we've seen crypto markets rally massively on the back of that news. Does everybody watch Bitcoin pop, Ethereum pop on the back of this news? But will this continue, and how will this continue? I want to tell you why. And the other thing we saw, there was big news this weekend, as if Silicon Valley Bank wasn't enough. We saw the stablecoin USDC depeg from $1 to 88 cents. Now, I've had Jeremy Allaire, the CEO of Circle, on my show. And to watch that stablecoin, considered the most robust stablecoin in the world, to go from $1 to 88 cents, which is a big deal, by the way, that was massive to see. And the question is, will CBDCs now get fast-tracked on the back of that? All right. How many people watched the USDC depegging over the weekend? All right. It was a big event in crypto, and we'll talk about it here. So let's get down and dirty, and let's talk about what actually happened. By the way, raise your hand if you think you know what happened. Just raise your hand. Okay. Some people know what happened. Some people didn't. All right. Let me tell you what I think happened. I think I'm pretty accurate here. So what actually happened? Well, look, on Thursday, Friday, we started to see that the Silicon Bank panic was going to turn into a real thing. Now, Silicon Valley Bank is like the 16th largest bank in America. It's a regional bank in Silicon Valley, but it primarily is involved in tech investments, venture capital. That also means it's the bank of choice for venture capitalists, where they put billions and billions of dollars of their limited partners' money in for investments. It also is the bank that loans money to tech startups, and it's the place where tech startups keep their money. It's also big in the wine industry, which is big in Napa Valley, if you've ever been there in San Francisco, all right? It's a big bank. They also have branches here in London. I actually interviewed one of their people back on my show about 8 years ago on a show I had called Silicon Reel, where I was looking at tech. So they've been around since 1983, very new bank, but they were heavily leveraged in the tech industry. And they were also subjected to the fact that the US yield curve has changed significantly in the last 6 months, which means rates used to be basically 0 or 1%, and now they're basically 4 and 5%. And when you change rates that much, if you're a bank and you've been buying these long-term treasuries, you get to a point where actually you're having a problem, and you're having a hard time trying to justify the assets that you bought on your balance sheet. So panic started to happen. The bank decided they were going to sell some shares in the bank to raise some money, and they screwed that up. And panic is like somebody yelling fire in a crowded theater. Does anybody know that analogy, right? I'd have to check the Supreme Court, but I think it's illegal to yell fire in a crowded theater, even though you have freedom of speech, because that one statement can cause a bunch of people to get killed when they don't need to get killed. And with fractional banking, any bank, when people make a run on it and take their deposits out, will make the bank fail by definition, because the bank will lend out 10 times more in deposits than what they have. And they lend them out in illiquid loans. And if everybody wants them there, if there's a panic, it's over. And in this age of social media and Twitter, panics that used to take a week or 2 weeks now can take a couple hours. And that's what happened last week with this bank. It all happened super fast. They had a call with a bunch of their really wealthy investors like Peter Thiel, who I will feature later on this presentation. And they said, please, you've done business with us for 10, 20 years. We've always supported you. We've given you loans to your crappy tech startups when you didn't deserve them. Please, please, please don't take your money out. And they said, okay, no problem. We've got your back. And they hung up the phone. And what did they do? They pulled out $40 billion in deposits because they said, I'm not taking the chance. And this thing was looking like it was going to crash. Okay. Now, here's the problem is that the federal government only guarantees deposits up to $250,000. Now, any CFO with their salt should know that and should never keep more than $250,000 in an unsecured account in a bank. But guess what? They all screwed up. 97% of those accounts had more than $250,000. So it meant a lot of people were going to lose a lot of money and they were never going to get it back. Is everybody clear so far? All right. This is 65,000 tech startups and London as well. There's a UK branch that weren't going to be able to make payroll next week. They lost all their money. Not to mention people that put money in their funds, not to mention other things like the circle deposits, which we'll get to. All right. So over the weekend, which is when they like to decide these things. On Friday, the stock price of the bank basically went to zero. The FDIC suspended it. The bank looked like it was going bankrupt. It was worth zero. By the way, it was worth like $100 billion 6 months ago. I mean, this is a big, massive fall off. And now everyone was scrambling. What's going to happen to the deposits? They locked the bank. And everyone's panicking, right? This is classic. Happens once every 20 years, right? It's pretty normal, but it's not nice if your savings is in there, that's for sure. So what happened? Over the weekend, the Fed's like, we're not bailing out banks anymore. We're not saving banks like we did during the financial crisis. But then they realized if they don't do this, every regional bank in America, the same thing's gonna happen because everybody's gonna yank their money out of that. And once they pull that money out of there, they pull that out of the money there, there's a complete crisis. There's a run on the bank. Everyone panics. There's no money in the system and the economy goes down the tubes. The next thing that happens is that China takes over all of the technology because America has got no tech startups anymore. And it's a national security issue, in my opinion. And that's why ultimately, late last night, the Fed stepped in and decided that they were going to make sure the banking system is safe. So the FDIC came out and said they set up this special program that basically is going to take the assets of the bank and hold them to maturity and guarantee every single deposit at Silicon Valley Bank, which means no matter how much money you had in there, when it opens up this morning in San Francisco, you can go in and do whatever you want with that money. It's as if nothing happens. This seamlessness is crucial because if some say they should have done this Friday, and they should have, because it already panicked people and scared people. But this means that hopefully things can continue without any problems and people could continue to develop and innovate. Is everybody following me so far? Thumbs up if you can still follow me, all right? This is crucial, okay? Let me just stop and pause this for a second. So you have to calm everybody down because panic can kill everything, right? If everyone panics, like I said, everybody in the theater gets trampled, even if there's no fire. And so they had to calm things down. Now all the Bitcoiners are saying, stop printing money that the taxpayer pays for, mostly low-income people pay for, to save these tech people that voted Democrat. So it was just Biden taking care of his own people. But like, honestly, I think they did the right thing because if this didn't happen, we would have seen markets globally come off. It would have been panic, it would have been buy, it would have been pain. And if we're on the edge of a recession now, we're going fully into a recession. And also would have been, in my opinion, a national security issue for America. America is already behind when it comes to crypto and DeFi to everybody else in the world because of their lousy regulations. Thank you, Gary Gensler, if you're watching. This would have taken them further behind. So this would be just literally a death knell in technology, which is the future, which could literally ruin its competitiveness as a nation. Everybody with me here so far? Okay, so let me continue. So they back the deposits. That doesn't mean, by the way, they save the greedy bankers. The greedy bankers at Silicon Valley Bank lose all of their equity. They lose their shares. The people that loaned them money lose their bonds. So they go to zero. It's not like when they saved Citibank back in the crisis or Goldman Sachs or Merrill Lynch or Bear Stearns. It's not like they saved the bankers and saved their equity holders. This is them saving the depositors. So it is a little bit better. It actually is. Now, some people say it's the same thing and it encourages people to gamble anyways. Maybe, but I think this was probably the smartest thing to do. I really do. So let's go on and look at what happened today as markets opened up. So now, today, as markets open up, bank stocks continue falling despite the emergency measures. All right. The world is still worried that all of these regional banks have the same problem Silicon Valley Bank does. They have a mismatch of assets. They're not going to be able to continue funding their deposits. And if there's any more runs, they're going to have failure after failure after failure. And even if the federal FDIC insures them, there might not be enough money to insure it. Although the Fed can always print money, there's still panic in the marketplace. And this is what we always expected. So this is putting more panic, more recessionary pressure on the entire system, which in my opinion means there's incredible opportunities to buy some of the most incredible companies on the cheap, because a lot of companies are going to fail right now. And some of the great tech companies are now looking for funding. They just need funding to make it through the next 6 months or 12 months. And you can do that. You can drive a hard bargain if you're willing to do that. Is that clear for everybody? You can get a huge chunk of their business for a small amount of money. Now let's go back to the end of 2021 when Bitcoin was at 69,000. I couldn't even get a phone call back from these companies back then. Why? Everyone was throwing so much money at them. They were the hottest deal in town, right? Pumping money, pumping money, pumping money, pumping money. I couldn't even get a phone call returned. Nowadays, we are getting our calls returned. So this is a buyer's market and we're taking advantage of this right now. We have to be careful, yes, but we believe there are literally generational wealth type opportunities happening right now in this market. If you can choose intelligently, you're going to take some risk. You're going to put your capital at risk, but we see payouts that are not going to be available in the public markets and in any cryptocurrency right now. Understood? All right, let me show you more. Next thing I want to talk about is the crypto markets are rallying massively. This is point number 2. But will this continue and how? This is fascinating, okay? So Bitcoin, look at this, crazy. Bitcoin is now higher than it was before the panic on Thursday last week of this bank closing. Why? Why? You might ask yourself, why? Bitcoin is on fire right now, blasting through 24,000, threatening to go up to 25,000. It's that which would be a high. It's high in like 9 months or something. What's going on here? Well, the Bitcoiners are laughing. They love a good crisis because for them, it shows everything flawed about the banking system, about the fractional reserve system, and about fiat currencies. It shows the Fed printing money to bail out yet another problem in banking, yet another fraudulent management. And guess who pays for it? Not just you, the taxpayer, but who really pays for this? Poor people pay for this. That's who pays for this. When inflation goes up, who pays for it? Rich people? No, poor people pay for this, right? When they write benefit checks for people, who pays for that in the long run? Poor people pay for this, right? And they're just saying this is all over again. They're just printing money all over again. It just it looks like something different. And guess what? They're right. This is just like printing money. It's just called something different, but it is just printing money at the end of the day. That's all it is. Somebody had to write a check and they wrote a check. Now they're saying it's only for this and it's for this. Okay, but they're still writing a check. So what does this mean for Bitcoin? Well, some are saying this is the first real world example to show financial institutions that Bitcoin is the stable coin of choice, right? That was the joke over the weekend between Michael Saylor, who's been on our show twice. He said, it's not USDC, Bitcoin is the stable coin of choice. That's an interesting point because the stable coins, those were falling potentially to zero. Bitcoin was the only asset that you might actually have a chance of holding their value because your savings in your bank were potentially going to zero. Does everyone see what's going on here, right? My friend Grant Cardone was on there saying, look, this is why I hold real estate. I don't want some numbers on a balance sheet in some institution that could be disappeared to zero. I want something like a house on a block that they're not going to take away from me. That's an asset. And you know what? I felt the same way. I got London Real. I got a business. You can't take this away from me. This is me. This is all of you. This is my content. This is my academies. This is our outlook. This is our ventures program. This is our investment club. I'd rather have this than money in a bank, right? I have an asset. I have a cash flowing asset. So all of a sudden, the banking system doesn't look so nice, doesn't look so safe, and assets start to look interesting. So some say this was the best use case for Bitcoin that's ever been seen. Does that concept make sense to everybody here? So this has been interesting to see this rally, and they might be right. Ethereum up even more than Bitcoin. Why is that? Well, Ethereum is the equivalent of decentralized finance. Bitcoin is not. I love Bitcoin, but it's digital gold. Okay, it's digital gold. Ethereum is digital technology play. It's a digital technology play. Ethereum is programmable. All right, it represents the future of decentralized finance. And all of my very famous guests, billionaires who have been on my show talking about decentralized finance, they all chimed in this weekend saying, guess what? DeFi didn't fail. Who failed? Centralized financial institutions run by folks that are greedy, that are not managing their risk. That's who failed. And do they have a point? Yeah, maybe they're right. Maybe they're right. All right. So I just want to stop this screen share really quick. Does that make sense to everybody here? We are really seeing potentially the market telling us that DeFi is the future, that DeFi showed a use case where this wouldn't have happened. DeFi would have had everything on the blockchain. I literally could have seen all of Silicon Valley Bank's assets. I could have seen those dodgy mortgage-backed securities they were holding. I could have seen the mismatched duration. I could have seen the treasury bonds they bought at 1% yield for 30 years that are now in the toilet by 4 and 5 points, right? And the depositors, they're paying 5% and their assets are gaining 1% and they're losing money every single day. They weren't telling me that, but I could have seen that on the blockchain. They're making some very good points here, all right? So crypto has had a real massive boost. It's had to push forward, but we're still potentially in a recessionary environment, all right? And that's not gonna be good for anybody, including crypto, in my opinion. So let me show you what this means. And then of course, how we can make some money on it. Third part is the stablecoin USDC depegging to 88 cents. And will that mean a fast track of CBDCs, which not everybody wants at this point? This blew my mind. Can everybody see what happened here? This is the USDC stablecoin. Now look, I'm giving you a graph from 7 days, but if you took this back to 3 years, you would see this peg basically never left 1. This was considered the gold standard of stablecoins. By the way, raise your hand if you know what a stablecoin is. Just hold your hands up. If you don't, that's okay. A stablecoin is a crypto invention that happened about 3-4 years ago. When I first interviewed Max Kaiser on Bitcoin 10 years ago, and I bought my first Bitcoin, stablecoins didn't exist. So if you own crypto, it was up and down every single day. You didn't know what the hell to do with it. About 4 years ago, someone invented a coin that was pegged to the US dollar. What an amazing idea, right? It was pegged to the US dollar. And Circle made one that was backed. We thought, Jeremy Allaire told me, 1-to-1 with US treasuries. And it was audited every single month. USDC was considered the gold standard of stablecoins. As in, if you minted 1 USDC and gave them $1, they would buy $1 worth of treasury bonds and hold it in a custodial account. Does everyone see that? Pretty safe, right? Not totally safe. If Jeremy Allaire goes to the Bahamas, then maybe I don't see that money. But, you know, pretty safe. There was another stablecoin called USDT, Tether. Does anybody here have any Tether? I know you do. I know you own some Tether out there, right? Now, everybody was pointing to Tether saying that's all the Chinese money. That's offshore. We don't know who the CEO is. We've never seen the audited accounts. We don't know their collateral. And guess what? Tether went above $1 this weekend because everybody was putting their money into Tether because all of a sudden the ugly stepchild stablecoin looked good because what happened with USDC? Jeremy Allaire of Circle comes out and says $3 billion of our reserves they got about 39 billion or 30 some billion of stablecoins. $3 billion is in Silicon Valley Bank. What? Who's your CFO? How can you put 3 billion in a bank account that's unsecured? At least you told us it was in treasuries. If you're the CEO of a competent company, it should be in treasuries or in a brokerage account that's insured higher or spread it across many accounts, each with their own insurance up to 250 or $1 million. You never, ever, ever do this. And that's what they did. So what happened? It destaked about 10%, which is about their reserves. I looked at this. I couldn't believe what was happening. I talked to my buddy at a hedge fund in New York City on Saturday morning. He buys distressed assets and it was at 91 cents. I was like, you gonna buy some? He's like, I'm thinking about buying some here. I'm like, how could they hold that? What the hell, right? It didn't make sense. It looked like a good buy, but you know, Luna looked like a good buy at 91 cents too, and you got smoked as it goes to 0. So it's one thing to say it looks like a good buy. It's something to put your money where your mouth is. Did anybody here buy USDC at 91 cents? I don't know many people that did. Okay. Everybody was scared shitless. They were panicking. They didn't know if they'd get their money back, if the VCs were going to be taught a lesson to let their Silicon Valley Bank fail. So it wasn't obvious, but what happened? They came out and they said, by the way, owned by BlackRock and all this stuff. They said, we'll cover it with our own money. So it went up a little bit, but anybody could say that. And then when it looked like the Fed was going to make them whole last night, Sunday night, it started trading up to 97, 98 cents. Now it's basically back at par. So there you go, folks. Exciting times. What do the Chinese say? May you live in interesting times. I never saw that coming. And so the question is, what does this mean for all of us? That's what we need to know. And in my opinion, this means there's an incredible opportunity because the world is scared. Regional banks are still going to play out. I think some more are going to fail. And if VC funding wasn't already severely cramped, and it is right now, it's cramped even more, which means buying opportunities right now for us. It's an incredible time to make intelligent, very surgical, specific investments in companies that we believe are going to be, the next unicorns, the next deca unicorns. We're looking for our companies to become $10 billion companies. That's what we're looking. So I want to show you how we're doing this. If anyone want to see how we're doing this, I'll show you how we're going to do this. Okay. By the way, any questions, put in the chat and I'll answer them at the end. So again, there is a lack of capital in the system, making this a buyer's market. There was honestly last week. That's why we were seeing this deal flow. Now it's gone up a lot. So we're in a beautiful situation right now, me and the members of our investment club, because we've got 50 people and with small amounts of capital, with $5,000 here, 10 grand here, these people, we can make significant investments in these companies and get large percentages. So when the market comes back, and it always does come back, the market's always cyclical, then the bull run happens and you're going to get these incredible outsized gains. This is the instrument, is a force multiplier for those gains. Now, look, you can buy Bitcoin right now. How many people think Bitcoin's going to 10x in the next year? Put your hands up. 10x. Come on, 25,000 to 250,000. Jay Scott, very bullish. You and Tim Draper. Not in a year. Not in 2 years, I don't think. Maybe in 3 years. Is it going to 100x in 5 years? I don't think so at this rate. But our investments can. So that's why we're looking at them, because we think they're a force multiplier. So we're investing strategically. This is me globetrotting across the world. It looks like I'm having fun, but I promise you I'm hard at work. This is me in Dubai. I'm hanging out with a bunch of crypto influencers on the left, Carl the Moon, BitBoy Crypto. I'm hanging out in the middle with Dr. Marwan Al-Taruni, who runs Digital Dubai, one of the smartest and most plugged in guy in Dubai when it comes to all things digital. I'm a big fan. Bottom right, I'm at one of the big VC firms in Dubai with their very cool artwork of $5,000 bills. I want that piece of art, by the way. And I'm with some crypto influencers in the upper right. So I'm constantly talking to people in the know so we can get the best deal flow. I'm doing this in Paris. This is me at the Paris Blockchain Week Summit last year. I'm doing media. I'm recording documentary films. I'm speaking with people in our portfolio companies. In the upper right-hand corner are two of our portfolio companies. One is Swissborg and one is Cross the Ages. Pretty much the most exciting metaverse company right now in the game, doing amazing things. Currently, their NFTs are like the hottest thing on Immutable X right now. They're amazing. So this is me hanging out with our portfolio companies and finding new investment opportunities. And of course, this is me in London a couple months ago. I'm hanging out with Yatsu of Animoca Brands, the most important man in crypto. He's building the future of the metaverse, hanging out with again, Sammy from Cross the Ages. And of course, hanging out with the alpacas in the bottom left-hand corner. If the banks fail, you might need some friends in low places. And you might need some dinner as well. So I want to stay friends with the alpacas. This is what I do. I'll be in Paris, by the way, next week if you want to join me at the Paris Blockchain Summit. And so I invest in early stage companies. We're looking at AI deals. We're looking at blockchain deals. We're looking at metaverse companies. That's what we're looking at. Why? We see super low valuations. We're buying these companies super cheap right now. They have incredible IP. They have revenues, but we're buying them really cheap because of this liquidity crunch. Right now we're seeing with Silicon Valley Bank and the rest of the market. You're seeing massive gains. You can invest in the biggest dislocation of wealth in history. And this is a lever, a force multiplier to get massive returns. It's high risk. I'm not going to fool you. This is high risk, but it's even higher reward. We believe the rewards massively outweigh the risk. Early stage investments is typically seed funding, startup funding, or early growth funding. This is before a company is profitable. Does that make sense to everybody here? The company is still burning money at these stages, right? That's why we're getting big chunks of their equity. If they're making money, they don't need us, all right? So we're investing in a company that's still burning money, but it has a path to profitability that we believe is going to happen. That's the essence of what this is. Let me give you a quick example of one of these investments. All right, this is just a quick example. This is something that happened. All right, does anybody know Peter Thiel? Thumbs up if you know who Peter Thiel is, or Mark Zuckerberg. Thumbs up if you know these people. Okay, how did Peter Thiel turn $500,000 into over $1 billion? Okay, this is an early stage deal. This is asymmetric returns. Let's talk about it. He did it back in 2004. He invested in Facebook. He invested $500,000 in Facebook via early stage equity private placement that valued the company at $10 million. So do the math, and Peter bought 5% of Facebook. Does that make sense to everybody? $500,000 divided by 10 million is 5%. Is that cool for everybody? By the way, did anybody else here get the phone call to make this investment? Anybody here? No? Galen, Natasha, did you get it? No? Anybody get it? Anybody get this look? No, of course you didn't, because you're not an accredited investor, right? You don't have a private banker in Switzerland. You're not part of the elite in Silicon Valley that gets to look at these deals. Guess what? The poor stay poor and the rich get richer, and it's even engineered into the deal flow. Has anyone ever heard of this term called accredited investor? Do you know what it means? It means if you're poor, you're not allowed to invest in the deals that can make you rich. But if you're rich, you can. That's what it means. Does everyone understand that? Okay, right? That's how wacky this system is. So you need to understand what's going on behind the scenes. What happened? 8 years later in 2012, Facebook launched their IPO and sold shares to the public. Now you get to invest. Now you can invest. Are you ready, Galen? Ready, Natasha? Ready, Jennifer, to spend your life savings? In 2012, right? Valuing the company at $100 billion. Now you can buy it, but it's a little more expensive than when Peter bought it, right? It's about 10,000 times more expensive, okay? What happens? Peter made a 2,300x return on his money. That's a 230,000% gain. I worked for 15 years at the highest levels of international finance. I worked on Wall Street. I worked in Chicago. I worked right here in the city of London. I never, ever, ever heard of anyone making the 2,300x on an investment, ever. It's unheard of. And guess what happened after they went public? What did the stock price do? It dropped. Anybody surprised? Raise your hand if you're surprised. Of course it dropped, because you got involved. You are the retail investor. The only time you get to buy something is when Peter Thiel is taking his profits. All right. Now, maybe you heard stories. Anyone ever heard of a story of someone making double their money on an IPO? Anyone ever heard that story? Come on. Maybe you've made it before. I made twice my money on an IPO. Meanwhile, Peter Thiel's laughing. He's laughing at his mansion saying, did you? I made 2,300 times on my money, right? The truth is retail, you as a retail investor, public markets are for sheep, and sheep get slaughtered. And so the price went down for a year. You were used as liquidity. The public was used as liquidity. So the conclusion is what? The rich get richer with deal flow, private equity investments. A simple $10,000 investment. Who could have put $10,000 into this? Come on. Who could have put $10,000? Put your hands up. Don't lie to me. You could have put 10,000 in this. You would have made $23 million, Rosa. Form with $23 million. All right. Now maybe that's not enough to retire on, Jan. Maybe you got some ballers in the house. Maybe that's just a couple boats, a jet, and you got to keep working. Okay, but it's enough to make a difference. So it just takes one of these, folks. I'm not saying put your whole portfolio in this. I'm not even saying put 10% of it. But if you don't have a small percentage of your portfolio in these deals, then your retirement's going to be a joke. You're going to wake up and you'll have made 10% on your retirement. That's not what we're here for. And what's the other conclusion I want to make? The wealthy invest in early stage companies, and the public markets are for suckers. Whenever you, as a retail member of the public, can buy an asset, and that includes Bitcoin and Ethereum and Tesla stock and Facebook stock, guess what? All of the juice is taken out of the trade. Is that clear for everybody here? Now, don't get me wrong. Everybody in my classes, in my academy, my crypto academy, I got a bunch of people here, my Kings of DeFi. I have a bunch of members of my investment club here. We all own Ethereum and Bitcoin and a bunch of other cryptos. They're a great part of a balanced portfolio. Don't get me wrong. But don't kid yourself that those things are going up 100x or 200x, because they're not. They're still great investments. We still think they'll have great returns. And don't get me wrong, a 2 or 3x return is a good return. 5x return is a great return. But don't kid yourself. They're not going to do asymmetric returns. So remember that. And when you're getting offered it as the public, someone else is getting their money out. A rich person is. And that's how they stay rich. Just really quickly, this happens in tokens, by the way. Has anyone ever heard of a pre-sale token? This is when companies sell tokens through these little derivative contracts to people for pre-agreed prices before the token exists. All right? That's how they make money. This is what we did with Cross the Ages with Sammy Schlagu, when I was taking pictures. We bought his pre-sale tokens, okay? Let me give you an example. How many people here own Solana? Anybody ever buy Solana? Anybody ever heard of Solana? Okay, it's one of the top 10 blockchains out there, okay? Solana did a pre-sale. Can everybody see this red circle here? This is all in the blockchain, by the way. You don't have to trust me. Go look. In April 5th, 2018, they sold tokens for 4 cents on the dollar. Let's scroll right. Look over right. They raised $3.17 million. They sold 79,300,000 tokens. By the way, did anybody here get in on that token sale? Of course you didn't. Of course you didn't, because you're not part of the elite, or you're not in my club. So 4 cents on the dollar, you could have bought Solana tokens. Where's Solana today? Even today, it's in the 20-some dollars. It was as high as 200, I think, at one point. That's a 59,000% return, okay? This is how it works. And this is happening all the time in crypto pre-sale tokens and equities. And you will never know about it until it's 10 years later and you're hearing the story told by me about Peter Thiel, right? So how do you get involved in these things? Well, you do what we do. We look at pitch decks every single day inside our investment club. This is a sample of some cover pages of pitch decks that are sent to us. We speak to a CEO live on a Zoom call every single week, and they pitch their company to us. Matter of fact, we have 2 this week, right, Martini? We have 2 CEOs coming on this week because we have so many deals we're looking at right now. And the CEOs are clamoring to come on our shows. These CEOs, by the way, are sometimes worth tens or hundreds of millions of dollars. They've had successful exits, but their companies right now need money. So they're coming on and pitching us because, well, there's a couple of reasons. Because we give them more than money. I'll explain that. These are some of our pitch decks that we look at. We're constantly looking at pitch decks, constantly evaluating these decks. This is our deal flow monitor. We check the company. We check the blockchain that it's on. We look at it's an equity deal or a token deal. We've got websites. We've got Discord chats. We've got valuations. We've got amounts. We're constantly tracking this with my investment club. All right. We're looking at deals right now. Orange Comet, Swissborg, and there's one other really hot deal we're looking at right now. I want to show you these so you can see the kind of thing we're looking at. That way you can know what a hot deal might look like and what you might be able to invest in. And maybe you can see one of these things out there. Your network is stronger than you think. Okay. So Orange Comet, I just released our episode with the CEO, David Broom. I'll play the trailer for you right here. They are a Web3 entertainment and technology company developing ecosystems and Web3 experiences in gaming. They are completely revolutionizing the entire industry. All right. They are doing NFT collections with Scottie Pippen of the Chicago Bulls. These are physical, digital, also known as phygital collections. They are selling out collections. Anthony Hopkins NFT, it's sold out, I think, in 7 minutes. Scottie Pippen's NFT sold out in like 77 seconds. The Walking Dead, they're building metaverses for. I can't tell you publicly some of the deals they're working on with major brands, movie franchises, fashion brands. They're hotter and hotter and hotter. We're actually dropping one of their NFTs on our email list, I think a week from today. So keep an eye out on your email. We're going to have early access to our team here. Orange Comet is completely changing the game. All right. I want to play for you the video we released with the CEO. Okay. This is what we do in London Real Ventures. Not only do we give you capital, but I also give you media exposure. This is why we get the hot deals as well. I put the CEO in the leather chair. I do an amazing interview with them. I blast that out to the world. That gives them future investments. That gives them key hires. That brings them customers. Then we take their product and we send it out to our 5 million subscribers worldwide, and we get them revenue generating customer flow. Does that make sense? I honestly never imagined this would be this hot. We are seeing the top tier deal flow. In this market, people want customers almost more than they want money because they want the revenue generation. So this is just a really quick snapshot of my conversation with David Broom. See if you can feel the energy of this guy and why we invested in David. All right, because yeah, David's got something a little bit special. This is my conversation with David Broom.
I never felt like I've left the entertainment industry and moving to Web3. I feel like I'm one that is trying to redefine it. If I don't sit there and go, that's it, man, that is fucking it. It's not walking out the door. If you feel great and you think you've done everything you possibly can, then you leave it to the world to determine if it's going to be successful or not. And that's what we're doing in Web3. We've been told, the movie studios to the Web3 industry itself, that there is no company in the world like Orange Comet now. We're looking to be a multi-billion-dollar publicly traded company. Period, end of story.
I haven't seen anybody coming through Web3 the way you guys do it.
We got involved in an amazing project with a British boy. His name is Joe Whale. I think I have the opportunity with Joe to make the next Pixar type movie, and all off of the mind and the work of a wonderful 13-year-old artist.
How do you find the bandwidth to do all these damn projects?
If I set out to do something, I get it done. And I'm not gonna fail here. There's no fucking way I'm gonna fail. I don't feel like I've reached my potential, and that's what's driving me. Tell kids and even grad students, they've gotta find something that they believe in, first and foremost. You know, people say, passion's bullshit. No, it's not. It's not. It drives everything. It just does, man. Once you make that decision to do something and pursue something, and you gotta go, or you gotta get out. You don't know what tomorrow holds. Don't you wanna try and live out your potential, find the happiness? We need to find inside of each of us what ultimately is gonna make us happy, and try and pursue that.
Can you guys feel his passion, right? Are you kidding me? Are you kidding me? We invest in people. I'm telling you, Dave came and pitched us, I think it was a month ago on a Zoom call. And by the way, 6 months ago, they would not return our phone call, just to be clear. They wouldn't even talk to us because we weren't big enough. And it took the market correction and the fact that we also got bigger to where we could cut them a check for $500,000, that then they decided to have a call with us. And then once they got on the call and Dave pitched us, the whole class was like, we want in on this right now. And all that video, by the way, were all of their creations. The stuff they're creating in the metaverse, these aren't NFTs. This is a digital collectible that gives you wow, that gives you emotion. And I've seen all the deals are cutting behind the scenes. They got an amazing board of directors, including people like William Shatner, tons of Hollywood actors. They've got investment from blockchains like Polygon, from AVAX, and now we're involved. So again, for us, and the valuation we're getting is amazing. I can't even tell you, it's amazing. And they want to take this sucker public next year. So like we have potential liquidity very fast. Now look, I don't know if this stuff's going to happen, but for us, we looked at 150 deals and we chose this. One of my mentors says, you got to kiss a lot of frogs to find a prince, okay? So we kiss these nasty, slimy frogs every single week, right? We kiss them, and then when we see something like Orange Comet, the whole team knows. And let me just say one more thing. My investment club, they can choose to invest in this deal or not. It's up to them. And they can put as little as $5,000 in, or they can put as much as $50,000 in. It's up to them. We give them that opportunity, and we give them access to a deal they would never see as a member of the public. This is unheard of in the VC community, unheard of. But we do it, and we do it because of the system, and we get it because London Real gets these deals because of our media platform, and we pass it on to our loyal members, and everybody can pool and invest as they wish. Again, this is unheard of. If you want to get this deal flow access at like a Pantera or one of these top funds, you have to put a minimum of $250,000 in. And guess what? They don't ask you if you want to invest in a deal. Your money goes wherever they want it to go. And all the crappy deals too. That's the way it works. For us, you literally can choose. And so that's the way we've set up this whole structure. Let me show you a couple more, including this last one, which is this latest deal, which is the one we're super excited about. And again, hopefully you can start to see patterns here, because when you see a deal like this, you'll maybe know to go in on this. And again, we've taught the whole team how to do this. A lot of our members started with no experience. Within 3 or 4 or 5 months, they can now spot a hot deal like that because they've seen 20, 30, 40, 50 pitches now of the hottest companies out there. Oh, by the way, we believe that AI is going to build the metaverse and have a huge component, which is why we're also going into AI alongside our metaverse and our blockchain companies. Swissborg, the number one crypto wealth manager in Europe. They have 1 million users on their phone app. That's unheard of. We've known these guys for the last 2 years. We love them. We love their management. We love their ethos. They have an incredible loyal community, and they made it through all of the centralized exchange drama with no problems because they're very Swiss and they always said exactly what they did. They always held their customers' assets in custody. They had no problems through this entire nonsense, which very few exchanges can say. We're huge fans of them. They're going to build the bank of the future. They have a 7-layer system. They're going to become the NASDAQ of the blockchain. We're huge fans of them. We're partners with them. And they got us in on an incredibly good valuation. And we're literally closing this deal on Friday. We had a bunch of members, about 6 more members who wanted to put more money in this week before we closed. And so that's happening right now. And this is going to be a crucial infrastructure player for us because they can potentially launch the tokens of the companies we're going to invest in. Does that make sense here? We're literally building an ecosystem. We're literally building our own financial ecosystem here at London Real, of our metaverse plays, of our enterprise plays, which I'll show you next, of our bank of the future, of our NFTs, we have DeFi protocols as well that we're investing in. We're building it all. And this is a crucial building block of that. And we couldn't be more excited to be partnering with the Swissborg people. This is all the stuff that they offer, incredible stuff. They've got indexes. They've got, like I said, they're literally selling their own equity on their app as well. And it's a mobile app. I mean, it's just advanced technology. And what are they doing in the bear market? They're building, which is the right thing to do. All right. So it's 3 hot deals. We're investing over $1 million in all these companies right now. I'm going to show you this last deal. Okay. And this is the hottest one we've seen. Okay. This is a bit of an example. This company, it does the job of 7 different businesses that right now are fractions right now in the marketplace. They're separate marketplaces right now. Right now, if you want to go into the metaverse, you go into Sandbox. If you want to create a crypto wallet, you go to MetaMask. If you want to sell an NFT, you go to OpenSea. Does everyone know what I'm talking about? Thumbs up with some of these things. They're all completely separate, right? Which makes it completely complicated. Let me ask you a question. Let me look at some names here. Christopher, Jan, Ish, Ollie, Adam McDonald, Ludit, Lenova. Can your grandma do any of those transactions? Can your grandma get in the Sandbox? No. Can your grandma go in the metaverse? No. Can your grandma mint an NFT and sell it? Probably not. Can your grandma set up a wallet on MetaMask? I got my mom to set one up. So I got her, she's 70 something. I got my daughter at 17, but it's hard to do because no one's offered a plug and play solution for enterprises up to this point. And that's what this company does. They identified the problem. Traditional marketing, by the way, is dead. Raise your hand if you're in internet marketing right now, or if you pay money for customer acquisition in any of your businesses. It's a mother right now, isn't it? Why? Apple's privacy update killed the cookies, right? Third-party cookies are dead. So customer acquisition costs are going through the roof, right? Less than 15% of customers are allowing brands to track and engage directly with them. This is the death of internet marketing, right? It's killing it. Customer acquisition costs, it's the top priority now of 65% of marketing. Wait for it. The opportunity, on top of that, customers, they want increasingly expected personalized experience from brands. I don't want an ad on YouTube and Facebook anymore. I want more. I want something for me, right? Brands are searching for this new way of having data resources, and they want what they call zero-party data, okay? 78% of marketers want zero-party data. What does that mean? That means it's direct consumer to end user company data. Does that make sense, right? Let me tell you an example. I got 2 million subscribers on YouTube right now. Do you know how many of those people's names I have or email addresses I have? Want to guess? 0. Because I don't have zero-party data. What do I spend my entire time doing? Getting you to come to my website so I can get your email. That's the story of London Real, because I want that zero-party data. This is what people want these days, because I'm not going to pay stupid money just to contact my own customers for a cookie that doesn't even work. Wait for it. Web3 can solve all of this, all right? Web3 allows brands to get the zero-party consumer data. It can provide a bespoke, beautiful, highly interactive experience, kills your customer acquisition costs, massively jacks up your loyalty and retention, all right? We found the one company that solved this problem. I'm telling you, we've been in blockchain heavy for 2 years. We've seen everything in front of the scenes, behind the scenes. I know the COO of Sandbox. I know all these people, okay? And I think we got a share screen here. We're going to stop real quick. So this is where we're at, right? We're at this company that is noticing all of these separate areas, all right, of what's happening here. All these separate pieces. This company brings them all together, all right? They started a few years ago with a few brands on the left, State Farm, Intel, GoDaddy. On the right, now they've got Frito-Lay, Pepsi, got big brands like WPP. They just signed a huge agreement with Deloitte & Touche, one of the biggest management consultants in the world. They're doing things with Google. Like I said, Volvo, Diageo. They're doing massive deals with these people, all right? I want to play for you a video of something that they're doing here. This will blow your mind, all right? Is everybody ready to see what this company is doing? Again, I didn't even know this was possible, all right? I didn't know if this was possible. Let me share this with you. Please keep this with just to yourself, what I'm going to share, but let me share this with you. This is what this company is doing. And again, the first time we saw this, we knew it was hot. Once you see enough of these deals, you know when they're hot and when they're not. And right now we have an opportunity to get in on this deal. So let me show you this. Oh yeah, okay, here we go. All right, this is part of a presentation we had from the executive of this company, I think about 10 days ago, all right? So here it is. It's coming off the tail end of one example into two more examples. So watch.
All of their events. Plus, as I said, we're now starting to work with radio, and they're generating incredible revenue with huge brands that oversee the entire experience from start to finish, plus seeing each piece individually. The next one here, this was the biggest thing that's ever been done in the space. You'll hear me say that a lot because we keep breaking those records, which is really exciting. 200 million bags of chips were printed with Frito-Lay, the PepsiCo corporation, taking Frito-Lay to the World Cup. And what happened was on these printed bags of chips, you had QR codes that led you for the first time ever into a Web3 wallet. So we're a direct vendor of PepsiCo, working directly with a number of their brands now on all sorts of different programs to have direct relationship with their customers. So what happened was you scan the QR code. And again, we're a fully customizable platform to allow the brands to have the look and feel that they want. This was a beautiful experience. You chose your team. You're instantly registered for a chance to win tickets to the World Cup. The next thing you were done was asked if you wanted to take a photo of yourself. This gets turned into a 3D hexagon coin. That's a gift. It's an NFT. Not everybody knew that. We told them that's what it was, but it didn't really matter. It was this beautiful gift that you got. You got to play games, collecting objects in AR. You got to play a scratch card. You got to answer trivia questions. Every single interaction got you an additional entry. And then that image that you took got added to this giant UGC experience. So now you're part of the biggest global soccer ball that there's ever been, united around your love of soccer. People went crazy for this. There's celebrities on the ball, and only the people that participated got this ball as an NFT. The numbers for this are absolutely staggering. Nobody had any idea outside of scanning a QR code that you were going to get entry into the sweeps. That's all they knew. I'd scan a QR code, I might win tickets to the World Cup. 35% of the people engaged beyond that. They decided, yes, I'll take a photo of myself. 40% of those people decided, I'll share this with my friends. 70% of those people came back to play daily. They now have more directly addressable users than they do Twitter followers. The programs are continuing with Pepsi, and we'll be excited to share what we're doing with them in the future. So that's the wallet side. That's looking at it from the festival. That's looking at it from the real world experiences. The next pieces of this is the virtual worlds. So GoDaddy is a great partner of ours. Discussions are underway at the moment for, they realize that the writing is on the wall. It's not just websites anymore. It'll be spaces and 3D.
So let me just zip ahead. He just talked about a GoDaddy piece where they created a virtual web for them. 12,000 people attended.
Want it to be a personal experience where it's profile page.
They played this whole piece, and then he moved forward to an experience that they did for Google. And it was just pretty incredible what they actually built.
For us to kind of take off this year. I've had a very long 9-10 months bringing all of these different companies to life and starting and supporting them. But it's been an incredible journey, and this was really spectacular. This is the first event that we did with Google. There's a number planned, and I'll explain a little bit more in a minute. But what they decided to do was host their cloud developer conference. This is 20,000 people from 100 countries around the world. Now, that in of itself is just a feat to get everybody into the same destination. Not to mention that we're doing this in a 3D virtual experience. This was built by one of our agency partners. As Brian mentioned, we don't want to do the building. We want to be the platform. This was designed by the Google design team. What you're seeing here is a hologram in space. This hologram is just a transparent video. What you're seeing here is UGC. This is user-generated content so that you get points for this. Every single interaction within this space is gauged. This is part of the CRM practice. We can monitor it and we can ascribe points. You're seeing people here gathering plants from the plant store. They go and plant those things. And once you do that, you get given extra points. Everything is rewarded. Everything is monitored, and it's tied into the point system is tied in at our end to the HR system point system at Google's end. So now you can take your points out of our world and you can use them to buy a shirt or a hat. We mute people automatically when they come into quiet zones. You get extra points for answering questions, watching content. This is another area of people watching content together. There's networking areas, and this part is key. This is the leaderboard, and this is where you can control your avatar. All of these points allow you to choose different pieces for your avatar, and people are going around going, where'd you get that background? Oh, you have to go and participate in this piece over here. That'll get you the points to be able to get there. This is a networking zone, and they hosted these throughout the experience where hundreds of people, thousands of people are engaging to talk about what they do in Google Cloud. And
I just want to zoom forward to this final piece, which I thought was pretty epic, where he talked about the customer engagement. This is important.
We had to provide a 2D experience. People that are selling cloud platforms for Google, you would imagine that they would be incredibly technically savvy. They're not. They're really good at sales. They're focused on their area of expertise, and that's kind of it. And the age range is massive. Generally seems to be between 35 and 60 years old is kind of the focus, and they're really focused on their specific area. This is the first time Google has made a step into this virtual metaverse world using Web3. And so they provide two solutions. They provided a 2D world that was just traditional. You could watch everything, digest everything that you needed, participate via Zoom, or they gave them the 3D options, didn't force it either way, and they allowed them to choose. Less than 2% of the people spent under 4 minutes of their time. 2%, 4 minutes. 98% of the attendees spent an average of 48 minutes. If you ever wanted the writing on the wall for where this is going, this is it. There is no question about it. People are coming back. Everything's rewarded. It's engaging. It's fun. We're now talking about building the future of what Google will look like, which will be not just their campus for internal purposes, but also external. Everything that we're doing right now with them is internal. They're really kind of kicking the tires and testing all the different bits and pieces, and they're doing an incredible job.
All right, I'll stop there. Who doesn't see this and be like, wow, come on, come on. And they're building this for major, major brands. I'm telling you, I've been in this space for 2 years, and I've seen metaverses, and I've seen wallets, and I've seen NFT marketplaces, but I've never, ever seen this actually happen at scale. By the way, Sandbox can only hold 150 people in one space at a time. They couldn't ever hold 22,000. That can't even be done, but this company is doing it. So, you know, again, it doesn't take a rocket scientist to see when a deal is hot. You all know what I mean? You all can tell this is hot. You don't even need to see the 150 deals. Okay, it helps if you've seen them. But we saw this, we saw the valuation, and we're like, this is a steal. I mean, this would have cost us 6 to 10 times the price a year ago. And we're getting it for that much of a discount. And so for us, this is like a no-brainer. And like I said, because of London Real Ventures and because of this platform that we're offering, we get a chance to look at it. On top of that, they're adding AI and they're enhancing the whole thing with AI. So that's just going to take the whole thing to the next level. And when we know that AI is probably going to build the metaverse going forward, and this is what they do, this is another great way for us to get involved in an AI play going forward. Potentially, I see Vadim doing this for top Fortune 500 companies all over the world. I mean, this is potentially a massive, massive company. You know, it's potentially the future PayPal or Google. One of our investment club members said this. He said, you ever wonder what it would be like to invest in PayPal in the early stages? He told the rest of the club, he said, that's what this is. He did a separate video for the whole club saying, don't miss this deal. That's what he said. And I think he was right. So look, my point of all of this is that what we try to do with our clubs is we try to get the highest level people in the world all in one place. And that's what we do with our clubs. Inside my investment club, I've got specialists in every single discipline. I've got one of the best lawyers in the world, one of the best former Wall Streeters in the world, the best real estate people in the world, healthcare, mining, crypto, DeFi, everybody. And so they're surrounding us the whole time, and they bring everybody up to the next level, because I believe you're the average of the 5 people you spend the most time with. Does everyone agree here? Has everyone ever heard that phrase? It's true. And I mean, I hate to say it, but who are you hanging out with right now? You know, I'll do a test. Take your mobile phone out right now. Take your phone out, pick it up. Go to your text messages. I'm going to do the same. Go to your text messages. Look at your last 10 text messages. Who are they from? Look at them, seriously. It's your mom, maybe your boyfriend or your girlfriend, maybe one of your kids, maybe some random couple friends. Are any of these people building $1 billion business? Are any of these people doing a TED Talk? Are any of these doing anything high performance in their life? I hate to say it, but probably not. Most people aren't hanging out with high performance people, right? And you're not going to do anything high performance unless you're surrounding yourself with these types of people. That's what we offer in this investment club. I'm not here to bring you one deal. I'm here to get you to step your entire game up so you become the person that brings us the next deal. That's what we do. I don't want to give you a fish and let you eat for a day. I want to teach you how to fish so you can not only eat for a lifetime, but bring me fish as well. I want your fish. And we all want each other's fish. So I believe you surround yourself with the best. That's why I recently took my daughter out to Boston and I encouraged her to go to university in Boston. I did this because I wanted her to be surrounded by the best. And by doing so, I thought to myself, well, look, that's the way she's going to get pushed to the next step. You know, that's how it's going to happen. So I did that. And that's why I went to MIT, because I was a big fish in a little pond at San Diego. I was the smartest kid in my high school. When I got to MIT, I was one of the dumbest kids there. And I had to step my game up and work hard as hell in order to compete at the top levels there, which I did, but I just did it because I had to. That's what we do in our course. This is Marianne Bartel, 35 years of Wall Street experience. She was the Chief Information Officer of Merrill Lynch Bank of America. She knows what the Federal Reserve is going to do before they do it. She probably told them to save SVB over the weekend. She understands bonds, yield curves, banking, inflation, stock markets. She's there with us every step of the way. She's invested in these deals. And we talk to her on a regular basis. She's an incredible asset for the group. I honestly, I look forward to talking to her on these calls because she teaches me stuff. And I understand fixed income very well. She teaches me stuff. Not just her, it's people like Andrew Haynes. Andrew Haynes, this is his mansion in the sandbox. This is his NFT gallery where he shows off his over 700 NFTs in the metaverse. Andrew understands the metaverse. So when we see a deal like Batum, he's one of the guys we go to and say, look, Andrew, is this something special or is this not something special? He also is going to one of the top executive training universities in Switzerland and hangs out with some of the top AI professors in the world, constantly feeding us information, constantly taking us to the next level. These are our members. Like I said, I look forward to these calls. I'm privileged to have this group. This is the people you get to hang out with. Andrew, by the way, will get on a one-on-one call with anybody in the investment club and bring you up to speed. And of course, there's Dr. Uncle Patrick, who on a dare for me a year ago started a YouTube channel. He comes from the medical industry. He didn't want to be a YouTuber. I said, give me 10 videos in 10 days. Just do it. And he did it and he kept going. 365 days later, he sent a video a day for a year. He's got hundreds of thousands of views. And it's no surprise, he gets offered hundreds of thousands of dollars in free pre-sale tokens for advising on companies. He usually turns them down because he's got better things to do. This is what he created from scratch in 12 months in my academy. This is what we're doing. And my philosophy is this: you give a man to fish, you feed him for a day, you teach him how to fish, you feed him for a lifetime. I want to teach you how to fish. I want to show you how to do this. If you want to go do this somewhere else, God bless. You probably want to stay because we're stronger as a group, right? What's that Nelson Mandela phrase? You can go fast alone or you can go far together. We're sticking together for the next 10 years. And we're all going to source our own deal flow. And that means I want you up to speed to tap into your network and go to the next conference and bring me the next deal. So we teach everybody in my academy how to find the next deal. And that's why I created the investment club. I got offered a pre-sale token deal for Across the Ages in December 21. And I had studied at the MIT Sloan School of Finance, probably the best business school in the world. I spent 15 years on Wall Street, Chicago, and London at the highest levels of international finance. And yet I never heard of any of this stuff. And it scared the pants off of me. I'm not going to lie. Pre-sale tokens, I was like, what the hell is going on here? What's this agreement? Is it legit? Is this real? Am I going to get my token? I was so uncomfortable. I thought, we got to teach this now, because if I'm uncomfortable, there's no way any of you will ever get one of these deals done. And if you do, you'll be scammed 10 ways from Friday. So I thought, I'm going to teach this. So I created the investment club. Every quarter, we pick up 10 spaces available. We happen to have one available now. It's 6 months, 3 months of coursework, 6 modules. It's application only. We do weekly live Zoom calls. There's a CEO pitching every single week. We have a private Telegram group, private Discord group. You get access to all the investment club deal flow. For now, we've never had a member leave. We've just given people lifetime memberships so far, because why wouldn't we? Everyone's an asset because we train them to be assets. You also get a full year of my Kings of DeFi program, which is everything advanced in crypto, blockchain, metaverse. You mint your own NFTs, you create your own metaverses as well. Our next live call is this Thursday. This is me teaching, and I do everything in real time. So I'm constantly changing the modules every single week, depending on what's happening in the marketplace, right? Silicon Valley Bank is now going to change my next module. And I'm also always trying to wear different colors just to make it a little more colorful for you. You guys like my ties and shirts? Trying to shake it up for you there. So it's real-time learning. This is the module. We start off with what is a blockchain metaverse pre-sale, early stage tokens. What is a SAFT or a SAFE? A SAFT is a simple agreement for future tokens or equity. Module 3 is deal flow part 1. How do you identify early winners? How do you do the 5 T's of due diligence? Team, traction, technology, tokenomics, terms and conditions. Deal flow part 2, how can you get into your network and bring us deals? How do you nurture these deals once you make the investment? And then how do you get your cash out? We want to get our capital out quickly so we can put it into new deals, build generational wealth. We're going to create billions of dollars of value over the next 10 years. I have no doubt in my mind. We have a private Telegram group. Everybody shares deal flow, shows their videos, shares what's going on. It was very busy this weekend, you can imagine. Private Discord group, the same. And it's this, our first live call is happening actually on Thursday. We have one space left on this protocol. This is always the case. We're always massively oversubscribed, all right? The investment, and this is an investment in learning all about how you do this deal flow and getting all the deal flow for the future, is $50,000, all right? This is a significant investment, and it gives you a significant result and a significant return. That's what this investment club is. One of my students said I should double the price. I think I should. That's what this brings you. This teaches you the fundamentals of early stage investing for equities and tokens. If you learn this, you can go do this on your own. You can go start your own fund, or you can stay with us for the next 10 years and create generational wealth. One thing you must do is take part of the greatest wealth creation event in human history. It's happening right now, folks. In 6 months from now, this could all be over. Stock market rallies 20%, crypto's up, doubles, and it's all over. And you missed your chance, and now you can't get into deals anymore. It'll happen that quick, all right? And our deal with Vadim is ending on Friday, and Swissborg as well. So if you want in on those. A lot of you remember about 4 months ago, I had a special opportunity for the last class, and a lot of you obviously didn't get in on it. But if you had, you would have made 466% return in one day. The token was up 5x in one day. My team made $300,000 on a blink. Honestly, it wasn't even a big deal. We didn't even put that much money in it because we thought it was a pretty good deal. We thought we'd make a little money. It was better than a sharp stick in the eye. By the way, crypto was down that month. And this is what we did. It's a DeFi protocol. So this is the kind of things we do on a regular basis. And so look, as Marianne Bartel told me, it only takes one. One of these deals will change everything for you. And I would just say, find a way to invest in at least one early stage deal because it'll make a massive difference. So my final steps are, don't let 2023 stuff pass you by. Learn early stage in investing now. Liquid tokens and publicly traded equities like Tesla have limited gains. You can learn from active investors, people really doing it, not just talking about it, doing podcasts about it. People actually investing in the deals for just $50,000. It's a significant investment with a big ROI. And Martini twisted my arm the other day and said, Brian, we're missing people and we want to change their lives. Give me a payment plan. So for $10,000 a month, you can get in on this deal. So there's no excuses except your own at this point. For the best deal flow in the world, you'll never ever see this deal flow anywhere else. And you'll never have the option to invest. That all is because of London Real Ventures. One thing I would say is if this price point is out of your range, you can join us on our Crypto and DeFi Academy and start learning blockchain and understanding what the metaverse is and NFTs. Again, always make sure you invest in your education, your mentorship, and your community. We just started my Crypto and DeFi class tonight. You can still get in on that if you want. It's 4 weeks. It's an accelerator. It teaches you everything you need to know about crypto, blockchain, centralized exchanges, decentralized swaps, hot wallets, cold wallets, trading strategies, stop loss orders, everything I learned on Wall Street on how to trade. It teaches you that in crypto. It's 4 weeks. It's 4 modules. It's invitation only. Although if you're on this call, I think we have a hot link where you can actually join. This is me teaching it. We graduated over 1,000 students on this course. It's extremely, extremely popular. It's 8 hours of live calls from me. I do this every single week, twice a week. I'm always there. All right. I have a triple tiered accountability system, gets you to do it. I have an e-learning platform where I have all my recorded modules there. We create community. We have dedicated coaches, leaders. They work with you every single day. The private group, we post all of our videos, all of our assignments. It's hands-on. There's nowhere to hide. This forces you to get the work done in 4 weeks, and you'll know more than 99% of anybody in crypto after this class. This will get you ready for our future stuff. Week 1, I teach you all about the history of crypto. You read the Bitcoin white paper, you learn about Ethereum, you learn about all the things that have happened over the last 10 years. And you are pre-approved on this live call at LondonReal.tv/5 for the Crypto and DeFi Academy. By the way, week 2, you get into the arena. I show you how to buy your coins. I teach you about stable coins. You set up your hot wallets, your cold wallets. You set up your centralized exchanges like whatever, Coinbase, Binance. You set up your decentralized exchanges. You actually execute a trade on Uniswap with a hot wallet. Blows people's minds. They're freaked out, but they do it and they learn. Module 3, we go deeper. You do yield farming, liquidity pools, and you buy an option on crypto. Yep, you buy a call option on Ethereum or Bitcoin, and I show you how options work. Guess what? They're not the big bad wolf. They actually can be used very intelligently. And of course, module 4, I teach you all my trading rules, my 10 coin rule, my 30-day watch list. I teach you stop losses. I teach you how to position your portfolio for the future. This is what we do. And my students just constantly rave about what we're doing in here. They constantly say amazing things about how they just love the fact that we teach them these things. You know, it's always nice just to hear from some of my students. And I'll just share with you just a really quick piece here. It's like 30 seconds, but it just shows you just kind of some of the things that they say. It's always kind of nice to hear what the students say. I think what they like is the fact that I teach things in real time. And so when you do that, I think it just kind of means a lot to what's kind of going on there as well. So let me just get this testimonial video. Oh yeah, here we go. Here's just like 30 seconds here of what some of the students are saying about the course.
They're learning. Thank you so much to Brian and everyone at London Real and the DeFi Academy for even putting together an amazing course like this.
Having Brian teach us the DeFi course, it's been surreal. He was there for us, and those calls were very pivotal. I'd like to personally thank Brian. Brian, thank you very much. It's been awesome. Look forward to seeing you in Kings.
You definitely need this course because crypto and DeFi are here to stay.
Go to LondonReal.tv/.
I love that statement. Crypto and DeFi are here to stay. Okay, you can learn this now or learn this later, but like this is coming. This is coming. And you want to learn this before the government starts rolling their CBDCs out on you. And that's the deal. So here you're pre-approved. This link is in the chat. There's a bunch of special bonuses I'm giving anybody that wants to join on this call. Dan Pena live at the Ritz. It's 2 hours of a private event you won't see anywhere else. It's $1 trillion man blasting with both barrels, trying to whip you into shape. There was a couple billionaires at this training. I'm also giving away module 1 of our Kings of DeFi program, which is our special advanced training. And I'm giving that away with anybody that joins our DeFi program. And of course, I'm giving away module 1 of our investment club, which teaches you how to invest in the hottest crypto pre-sale tokens and early stage equity deals. So that all is yours as a gift tonight. And remember, we're actually doing these deals like Ashwap, and we're there doing these deals like Orange Comet, talking with the CEOs. And I've even given a special bonus way on how to trade NFTs on the back of that as well. So there you go, folks. You're all pre-approved if you want to do that. Just want to say our courses aren't for day traders. Please go somewhere else. We're not for people that want to get rich quick. That's just not what we're here for. I'm here for a 10-year horizon. I want to build generational wealth. And it's not there for academics. I want people that are going to pull the trigger, get your hands dirty, and learn by doing. That's so important for us. And look, as Bud Fox says, life all comes down to a few moments. This is one of them. And I hope you pulled the trigger and join us. And now I'd love to answer some questions for you. I hope that was helpful for everybody. Hope you got something out of that and learn a little bit about what's going on with that system. I want to answer some questions and I'll look through it. But before I do that, I just want to pass it over to Martini. Martini is our director of operations. She's also the gatekeeper for anybody wanting to join Investment Club or any of our higher programs. She literally approves them. She also invests alongside of us in the deals inside the community. And she understands everything that's happening there. So Martini, maybe you can tell them on how they should contact you if they want to learn more about this stuff.
Yes. This is so exciting. And I just got a message from Ryan, who's like, after listening to this, he wants to join us in Investment Club again, but he's already a member, right? So good to see you on the call, Ryan. And thanks for the message. And yes, this is exciting. But as Brian said a little bit earlier, that, you know, the bear market creates millionaires and billionaires. And where the rich were the only ones who had the access to these types of opportunities, we've tapped into the opportunity of the investment club. And so with this, it's time to start thinking and moving like the wealthy and start moving and thinking strategically, right? And so the rich get richer with deal flow. And we're in a buyer's market. So be sure to take advantage of this opportunity that you have here, because you're not going to find it anywhere else. And like Brian said, once you go public, if you're buying public, there's no fun in that, and there's no wealth in that. So definitely the winning formula is going to be education, it's going to be influence, community, as well as, of course, early stage investing. And so speaking of, early stage investing and community, I saw that we have like 14 or 15 of our investment club members who are here on the call right now. So if you guys can just give us a wave, just give us a wave. So it's so good to see everybody, and the amount of community, the amount of support, the amount of high level people who are going to be with you every single step of the way during this investment journey that we're on is absolutely incredible. And that is what London Real is all about. So thank you guys for showing up and supporting right after you guys were on the mastermind call today. So guys, we are a family. And for those of you who are wanting to be a part of this team and wanting to build wealth, we are here to support you. So if you're new to this, that's totally okay. We walk you through step by step how to do it. And once again, you've got the community there to answer any questions. We do have calls every single week, not only bringing on CEOs, but if you have additional questions or need support or whatnot, or want to know how to network yourself a little bit more so that you can reach out to CEOs like Orange, Comet, and Vadim, which a student actually did bring in, we're here to support you with that, guys. So I went ahead and put my links inside of the chat here. One for you guys to take a look at everything that's included or everything that involves the investment club. Okay. The next thing, after you've taken a look at that and read all the details, please go ahead and book a call with me. I've just opened up my schedule for today to midnight tonight for PST, but as we have people from all over the world, and those of you who are on the inside, you guys know that I'm up 24/7. So if you don't see a time that's available, please go ahead and send me a message either on Facebook or an email and let me know where you're from, and what time is most ideal for you. And I'll do my best to work around my schedule to support you, because you guys are very important to us and these deals are moving fast. So we want to get you supported as fast as possible. So guys, please, 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 once again, this is a buyer's market, and this is an awesome time to take advantage of these opportunities that are here. So we can't wait to see you on the inside. Our call is going to be on Thursday, and we hope to see you there. Back to you, Brian.
All right, give it up for Martini, the one and only, the one running the whole show here. And we appreciate Martini. She literally is. She's going 24/7. I mean, we're so oversubscribed for this investment club deal that she's so generous with her time. I mean, she's in Vegas. I don't even know when she sleeps. I wake up and she's talking to me. I go to bed and I'm exchanging messages with her, but she's literally there to make sure our community is always happy, always engaged, and always getting the best opportunities. And honestly, you're going to kick yourself if you miss this Vadim deal, because you're going to look at this company in a few years from now, and they'll literally be the Google of enterprise metaverses for every company in the world. And you would have said, oh, I saw those guys. I had that opportunity. And that's the kind of things we're seeing. And we're going to start seeing one of those every month, or two of those a month going forward. We're going to see those. But Vadim, I think, is super special. Orange Comet, we couldn't be more excited about. And like I said, Vadim and Swissborg closed this week. So if you're interested, speak to Martini, and we can get you in on those deals. Again, you can start with as little as 5,000 or go as high as whatever you want within reason. And we can get you in for those things. But start now. Don't be late on this, because you'll blink your eyes, the bull market will be back, and you just won't get access to any of these opportunities. And I love crypto and I love DeFi, but you'll never see the returns that we're going to see in here. So try to make that conscious choice. Again, try to start having a wealth mindset as well. You really got to think differently if you want to build wealth. You can't do the old things you used to do. So if you would usually pass or see flaws and things. Be like, okay, cool. But that kind of mentality got you to where you are. You've got to change something to go forward. Just looking at some of the comments and questions, a lot of questions about DeFi. Scott was asking me a question about a stable coin. How can it depeg? I think one of the interesting things we saw is this concept of liquidity, Jay Scott. And there's what something is worth, but then there's also what something will pay for it or what it's worth at the time. And we saw this in the real estate market in the great financial crisis. I always used to call out Martini's hometown of Vegas, but like homes in Vegas, because it was such a hot market at one point, you could not sell your home in Vegas for any price. And you're like, well, wait a second, this house is clearly worth at least, I paid $1 million for it. It's clearly worth $500,000. Well, guess what? Today it's worth zero. Clearly it's worth $100,000. Today it's worth zero because people had to liquidate assets to cover other calls. And so people were selling those things below market value. And so, Jay Scott, that's exactly what was happening with Circle. Something supposedly is pegged 1-to-1, but what if the assets aren't there? Or what if someone just thinks those assets aren't there? Or what if someone is betting those assets aren't there? We don't know. And if there's a little bit of uncertainty, someone said, well, guess what? I'm going to sell this thing at $1, 99 cents, 98 cents, 97 cents. On the outside chance it goes to zero, I'm going to take that. And if you're not firm in your convictions, you're not going to buy at 91 cents. Like I said, I talked to my buddy in New York, but he didn't buy at 91 and I didn't buy at 91 because we weren't that sure, right? We weren't sure the Fed was going to back them. And plus they had $8 billion in other banks. What if another bank went bankrupt? What if Circle did actually depeg? They already lied to me once. They told me it was 1-to-1 treasury. So it's those combination of things, Scott, where there's uncertainty and then no one's backing that 1-to-1. Circle's not buying them for 1-to-1. They don't have any money, right? Their money's all locked up in a bank that just failed. So there's nobody protecting that peg. And that's what happens. This happens in history all the time, where things trade through their intrinsic value because there's a liquidity crunch and crisis, or there's uncertainty about the future. So that's what happens there. Yeah, a bunch of people questions there are just asking about opportunities in equity and in a bunch of these other deals. One thing I'll say, I was at a private dinner here in London about 2 weeks ago in the city, and everyone was just saying how venture capital has just dried up across the board. Last year, something happened that we hadn't seen happen, I think, in 20 years. And that is both equities and bonds lost money in the same year. Typically, when one made money, the other didn't. So stock and bonds both lost a lot of money last year, which really severely cripples any type of pension fund or anything else that typically puts capital out there. That on top of FTX bruised a bunch of people up, and it just means there's not a lot of capital out there, which means we're in the driving seat. Add on top of that, London Real Ventures and our media platform, we're seeing amazing deals, and we're trying to stay focused and making sure we build in the bear markets. So when it comes back, and it always does, then we're going to have these massive asymmetric returns. So I'd say for everybody here, take this bear market not to go and cry, not to get out of crypto. I know you have to listen to your friends and family at dinners and Thanksgivings and Christmas make fun of your Bitcoin predictions from last year, right? Anybody have that happen? But you're going to be smiling to yourself when a couple of years from now, you're going to say, yeah, okay, but this all came back. You have to build in the bear markets. And that can mean a bunch of things. That can mean your education, your influence, and your early stage deals. You have to build those things. And for some of our students, they're building, their influence to their YouTube channels and stuff. If you build, you will be handsomely rewarded because all the fair weather friends already ran for the hills. Also, this market doesn't forget. So a couple of years from now, when all the bull market, fair weather friends are back, they won't see the deal flow because everyone will say, oh yeah, I remember you disappeared for a couple of years while we were all here slugging it out in the trenches. So that's what we're doing here, and it's really good. And look, I just want to say thank you to the Investment Club community. You all are amazing. All of our community is incredible, but Investment Club right now, it's just such an incredible group of people. We're in such a position to do amazing things. And I can't wait to close out these deals in Batum and Swissborg and go on to the next. We got a bunch of other cool ones we're looking at. So that's it, folks. Book a call with Martini if you're curious, but only if you're serious because she's really busy and I don't want her to get less sleep than she's currently getting. So if you do book a call, make sure you're really serious about one of these programs and you want to do something or find out like how we can seriously be a part of your future. And that's it. Hope you've enjoyed this. I hope it gives you some information, and I hope to see you in our crypto and DeFi accelerator in our Wealth Accelerator or even in our investment club going forward. Our next call's on Thursday. All right. Big love, everybody. Thank you so much. All right. Have a great evening. I'll talk to you later. Bye.